Hey everyone, happy Friday. I hope you guys have all been having a pretty good weekend so far. Loki's over here about to cause more mayhem, so I'm going to be a little bit more strict with him today. Yeah, you can see him. So, happy Friday, like I just said. We're going to be talking about a bunch of stuff tonight. This is going to be a longer stream for sure. I missed out on streaming the past few days because I've been dealing with a whole bunch of audio problems that I've just been able to get back up and running. So luckily, guys, we're good to go. Let me give Loki a treat over here. He's being a little bit of a brat. Come on, there you go. Go run away. There we go. All right. So hope you guys are all having a really good Friday. I think a few things we have to talk about today is all the bad news that came out as far as inflation, as far as just a whole bunch of nasty stuff like these sanctions probably going to be going on the Chinese here. And what that means for us down the road, because the government or the Fed's number one goal right now is to curb inflation. And if the government is trying to raise inflationary tendencies, so to speak, or cause inflation for national security defense, how does the Federal Reserve actually respond to that, okay? And hey, Tony, hey, Nitesh, hope you guys are having a good day. So let's just start off to what happened with Bitcoin pretty much over the last 4 or 5 days. It has not been pretty, but at least we've been able to make some money, right? That's the big thing. We've been able to make some good profits here. Unfortunately, right now, we've still failed to break out above this 50-week moving average here. We had been talking about this death cross for a while and what this may mean. It looks like at this point, the death cross still kind of represents something really, really bad. Thinking of this death cross over here, and of course, some of the death crosses we've seen over the past few months, everybody. Definitely not a good sign. However, even though we're at the high point here, I still wouldn't throw in the towel just yet, because even though we have had some of this bad news over the past few days, you guys have seen that the market can really pump out of nowhere, even if the news isn't really the best. And I think we've kind of had a really good example of that based off of the news we saw this past January. Okay, excuse me. So, now that we have an idea of what's going on here on the weekly, basically just stagnating a little bit on some resistance levels here. Nothing too complicated. There's really nothing complicated about this Bitcoin weekly chart, right? Death cross over here on the weekly chart, still just battling this resistance level around 25,200. I'm not too concerned about this, you guys. You guys know this quite a bit now. But as far as the daily chart here, this is what's starting to confuse me, or not confuse me, but concern me. We hit our premium level of resistance. We just hit our level of resistance, basically, that kind of matched up with the highs we saw back over here in August. But now, we're using this new indicator more and more. We're starting to see this change of character pop up. That change of character is definitely not what I'm looking for at this point in time, because this most likely means we're going to be back here testing around 21,500 over the next few days. So am I going to be buying anything? No, I'm not. Will I be doing some day trades? Sure, you betcha. But at this point here, I'm getting more and more concerned that there's a possibility that we go all the way back down here below the 50-day moving average. And even if we do find some way, guys, to bounce from here, let me take the magnet off for you guys. Even if we find some way to bounce, I still think at the end of the day, this death cross right here between the 20 and the 50, that's eventually going to cause us to come right back down here to 20,000. And I think this is probably going to be our floor for maybe the next few weeks at least, if we actually make it back down here at all. You can see the 200 daily moving average here as well. It's been pretty sideways over the past few weeks, to be honest. You guys can see how flat this line is here. I doubt we break down below this anytime in February, anytime early March. If we are going to break down below this, again, we have to have some really bad news coming out. And the news we had today was actually not good. It was actually pretty bad. But, bad news here is different than bad news up here at the resistance levels. Because now as we go talk about the 4-hour chart, and we've been talking about these signals for a while now, actually that's like 3-4 days. You can see I was kind of wondering what this change of character motion was going to do, if it was actually going to be a good sell signal, or if it was just, maybe a fake out or something, because, it only works about, this indicator only works about 88% of the time. So like a good amount, but, definitely not 100% of the time. It turns out, excuse me, guys, that we are coming down quite a bit from there. And if you guys did do a short and you guys didn't sell the short out of a panic up here when we got towards the resistance levels, you guys would be up about 5% at this moment in time. However, I think a lot of you guys have been using this, from what I've been hearing from you guys personally. You guys have been using this not to trade Bitcoin, but instead do longs and shorts on other altcoins. I've been hearing a lot of you guys talking about Matic, Ethereum Classic, and There's one more you guys have been using this on quite a bit. Ethereum, but something else. I'll have to remember it. But it seems like it's been working out for you guys so far, so I'm happy about it. Definitely some volatility here. On the 15-minute chart, if you guys care, we did have that big dip in the morning here after inflation data came out. It was just not the best news, as you guys know. We had a false signal over here as far as a change of character after that big move, because overall the market kept on sinking here, and so far over the last few minutes, we've had another change of character on the downward side. Again, we'll see how accurate this is going to be. When we have these big volatile moments, I'm really concerned about what happens when we find our new support levels down here. Now, going over here to the daily, let's talk about some other stuff. This is a new chart for me, or new layout for me, so I'm going to have to do a little bit of technical analysis all over again. But basically, you guys can see Ethereum is still bouncing around this level of resistance, right around here, around 1,700, if you will, and really finding that support level down here at about 1,500. We haven't changed. This is almost like an oil stock to me. We're going more and more sideways, but again, just like Bitcoin, we're looking more and more like we want to see a death cross here, and the trends are starting to shift in a way that is not in the favor of the bulls right now, okay? And hey, Danny, hey, JCD, hey, Cabrillo, what's right here? And hey, Patrick, hope you're doing well. Thank you. I like every time I can. Thanks. I really do appreciate that. I just bought recently. Dude, nice. What do you call? It's always better to buy the dips than try to buy these really high resistance levels. It can be very, very annoying if you guys don't get those right. As far as everything else, guys, what's the best way to show this to you? First, let's go over the NASDAQ, the S&P, and the Dow data, and then let's actually kind of see what this inflation data is entailing. And then let's hop over to some of this China, Russia, Ukraine news, the West news, right? So first of all, let's go over here. So something interesting for you guys. This is December, this is January. So while the NASDAQ and SPY are still up quite a bit for the year, the Dow Jones is actually negative for the year now, which I thought was very, very interesting. After all that, we got new yearly lows for the Dow. But again, that's because the Dow Jones broke out a while before. Let me go to the weekly chart. Way, way before any of the other indexes here, right? The breakout occurred way back over here in November. Meanwhile, back in October, the NASDAQ and the S&P were just crashing like a rock. As far as the NASDAQ here, we had talked about this on the weekly chart and the daily chart, definitely breaking back down below that 50 moving average on the weekly chart. However, we did have a sell signal right here on the daily, and basically I think at the time we were just talking about what happens if we break down below this 20-day moving average. But overall, it's kind of what we expected coming back over here. And what did we say earlier? What did we say? Sorry, guys, I feel like I'm yelling right now. What did we say earlier a couple weeks ago, or about a week ago? If we were to break down, I doubt we would come down hard and fast. It would be much more of a grind. And so far, we're seeing that grind back down. And this has not been a pretty, downward move. We've seen a lot of volatility within this. If you go over here to the 4-hour chart, you're about to see that death cross there. But what do you call it? We've been having our ups and downs here, and it's just been okay. It's been a big grind. If you guys are trading, you guys are definitely doing a lot more day trading, or hopefully buying towards the end of one day and then selling towards the first few hours of the following day, usually with you guys' puts. I know a couple of you guys have been making some good money on those. But as we talk about these current resistance levels, you're just seeing a nice downtrend. Again, nothing too crazy right there. So nice downtrend. Again, nothing too crazy at this point. But I am watching this death cross right here and seeing if that's going to drop us back down here to maybe, let's say around 11,700 or so. It is interesting that we already broke down below 12,000 here. It wasn't even too much of a battle as far as the NASDAQ was concerned here. Just resting up on this 200 daily moving average. Hold on one second, guys. Sorry, I invited my mom and sister over for teriyaki tonight, and that's why I'm streaming a little bit later. But I think my sister brought over some type of electric toy because I'm hearing it, and I can hear my dog running around frantically. So I'm guessing they're having some type of fun upstairs. But I wanted to make sure nothing bad was happening. Okay, but yeah, so you can see everything is still relatively bearish. Everything is actually, both of the NASDAQ and the SPY are both holding on to the 200 daily moving averages right now. I expect this to overall continue falling over the next few weeks, but I wouldn't be surprised if by next week we start to go sideways a little bit more. Some of the news that really stung today was this inflation data that we had been talking about for the past few days. I wonder if I can find the original video here. We can go through this article very fast, but I just want to show you guys the CNBC video before we talk about some other stuff. So a new government reading shows persistent high inflation rattled Wall Street on Friday, Consumers can expect a rate of price growth will likely stay higher than the average through 2023. Inflation is going to come down gradually if the Fed conducts policy the way it says it intends to, said William Luther, director of the American Institute of Economic Research. Basically, inflation is too high. We're not going to get too much into the weeds here, but we're going to go over here to, oops-a-daisy, the YouTube right here. And then we're going to go over here to, do I have CNBC over here? There you go. CNBC. That way we can have Rick Santelli early this morning give us an idea of what was going on. Was it this one? Yeah, I think it was that one. Make sure there's something else in the beginning. Okay, so here we go, guys. I'm going to put the audio on so you guys can hear.
Welcome back to Squawk Box. Rick Santelli here, live on the floor of the... I wish I was on the floor. Yeah. CME HQ with some of the last breaking news of a very...
So basically, as he's talking and giving you guys, he's not there yet, but basically he's going to be explaining the inflation numbers so you guys can see how bad they were, okay?
A 0.6. Now, that isn't bad considering sequentially it was up 0.2 until we get a revision. That's the strongest level since October when it was up 0.8. If we look at
oh, sorry, guys. I know you guys on TikTok, guys, can't hear this.
Up 1.8, up 1.8. That is the best level going all the way back to, and this is pretty healthy, going back to March of 21 when it was up 5.2%. Now, if we look at real personal spending adjusted for pricing pressures, it's up 1.1%, exactly as expected. Now, the money numbers. On the personal consumption deflator month over month, and realize the high water mark was 1% going back to 1980. That was in June of 22. It is up 0.6%. 0.6%. In the rearview mirror, it's up 0.2, up 0.6. Actually is the highest level now going back to that high water mark, which was up 1.0. And if we look at year over year personal consumption expenditure, the deflator, it's up 5.4. The high water mark there was 7%. That went back to 81. That was in June of 22. So 5.4%. How does that comp? Well, in the rear view mirror, we had 5%. That now becomes 5.3. So 5.4 is the highest since November when it was 5.5. On the month over month core personal consumption expenditure deflator month over month, high watermark up 0.63%. That was back to 2011 comp. That was in April of 21. It's currently up 0.6 again, up 0.6. And we want to definitely pay attention to the year over year core deflator, maybe one of the more important numbers for release today. Expecting 4.3, it comes out up 4.7, high watermark was in February of 22 at 5.4. That went back to 1983 at 4.7%. That is the highest level going back to October when it was 5.05.
Okay, I think that's all we need to know for now as far as that's concerned. But basically, guys, inflation is not looking too good. I wish it was looking better. The entire market just took a big old shitter on us today. And you can see the gap down that we saw after that nice little gap up we had the previous day. So things, again, are not looking so great. Unfortunately, the news has not been as good as we want it to be. And guys, again, it really all started with these earnings reports that we had talked about for weeks. About the big Apple, Google, and Amazon one. None of them actually had very good earnings, and because of that, you're starting to see this whole nice rally come to a close brought down by really three big companies, okay? Now, come back over here to Bitcoin. Let's go back over on the 15-minute chart. I'm waiting for the new 24-hour stream to be set up. I'm hoping it comes this weekend or somewhere close. Afterwards, you guys are going to have the 15-minute Bitcoin chart placed on YouTube, so you guys can be watching it the whole time, okay? Now, hey, Ken, hey, No Tacos, No Life, and hey, Roshan, how do you keep up with the news? I don't have a job. Like, trading is my job, so I just kind of have my phone on me, and I'm just kind of chilling. It's not too complicated, really. As far as I'm concerned, how I keep up with the news, it really depends on what I'm looking for, but usually I'll have Fox Business and CNBC running like just on my computer while I'm doing it, while I'm working. It's not too complicated. You know, you can just find it online. You can stream it from the Xfinity app if you want to. If you guys are looking for a free way to watch it, I think all you guys have to do is type in CNBC online free stream. and you'll find it on one of the top Google results. It'll be like it won't be CNBC.com, but it'll be one of the extra ones. Yeah, just have an ad blocker on there because sometimes the ads can get annoying. But if you have an ad blocker, there's no ads, right? Or you could do Fox Business live stream online free. Just type it in there and you can get any channel you guys want to. I don't pay for cable, so sometimes I do that. Very simple. Besides that, I have CNBC open every now and again. Most of the stuff on CNBC's main page is kind of like, I don't want to say like propaganda, but it's everything that makes you want to click. It's like the most clickbaitiest stuff you're going to see. Like, luxury EV maker Lucid appears to have a demand problem. I don't care about Lucid Motors too much. I have a long-term stake, but I don't care about it. Stocks close lower. Yeah, we already know this. It's, Oscars. I don't care about the Oscars while I'm looking at financial data. Inflation rose. Yeah, that's I can be looking for. The pro stuff, I don't pay for pro. For the black community, Bitcoin represents an opportunity for wealth preservation. I'm black, but I don't care about that. Right? Here's how to buy treasury bills as some yield reaches 5%. I don't care about that. I usually don't usually care about all this stuff. Usually what you guys can do is go over here to business or investing. And these usually I'm looking for. You can go to market news and stuff like this as well. But usually if you just go to business economy or business finance, this is usually what I'm kind of digging into a little bit more. See, consumer debt hits 16.9 trillion as delinquencies also rise. People they're having trouble paying their debt. That seems like much more of a larger story than anything I saw on the front page, right? So kind of knowing where to go to get your data can make things very, very easy. Just having an organizational standard when it comes to getting your media. I would say the business section here, or if you guys like Fox Business, I like Fox Business a lot. I don't talk about it too much though, because I'm always kind of paranoid that YouTube will not like me because I watch Fox Business. And this one's right here, right? Same thing with Fox and CNBC though. Depressed and disheveled. I don't care about that. I don't care about any of this stuff. You want to go over here to the economy, and then you guys could start to see what's going on from an economic standpoint. But again, the front page of most news stories are just not that important unless there's some type of breaking news popping up. CNBC usually has more breaking news than Fox Business, though, as far as I'm concerned, which is why I'm also kind of here. And also, when I go over here, I like that they have the headline numbers right here. When you go over to Fox Business, right, it's kind of right here in the corner. It doesn't look as flashy as it does on CNBC. So it's better for a YouTube audience as well. But yeah. Just having a couple news sources, usually Fox Business, CNBC, if you want to have Bloomberg open as well. I don't watch Bloomberg because they're very, very dry. However, if there's something I'm interested in, maybe I'll go check out Bloomberg if there's some news going on. The people at Bloomberg, when it comes to China, are much more knowledgeable than both Fox Business and CNBC combined, okay? I'm pretty sure like 80% of the people that work at Bloomberg are Asian, because every single time I go over there, they all know everything about Asia. They probably had family that grew up there or something. They all have more expertise in that one area, which is why I check them out every now and again. They're very highly qualified people to be talking about finance. Oh, it's right here. Have I seen the new Shakira video? Would you invest in any brands she promotes for? No, I wouldn't buy off of that. The overall market still seems to be going in this downward trend no matter what you're looking at, the NASDAQ or SPY, whatever. Nothing seems like it'd be very good at this point in time. Well, let's go right here. Let's go to the 5-minute chart so we can kind of watch this play out here. We can go to the 15-minute chart. There's a little bit less noise there. But no, I typically don't trade like that. I only trade a handful of things normally, and that's the way I'd recommend most of you guys go. You could have one or two things. If you find it, you can try to make those trades. But traditionally, I trade like Apple, Microsoft, Nvidia, Google, Bitcoin, Ethereum, maybe some Matic, some Dogecoin, and maybe some Ethereum Classic. But most of the time, I'm only trading a handful of things. They're the things I know how to trade very well, and I understand how they react to market events and things like that. Sorry, my dog's over here on the left. But yeah, so I would say, probably not. All my TikTok, Facebook feed has been so far as this lady dancing like left and right, and having a bunch of fun while doing it. And can I look at Netflix? Yeah. Netflix is probably going to have some problems because I know they were cutting the prices of their service everywhere but like America, basically. So watch out for that, That was Netflix down 2% today. Not too bad. kind of just having a rough day from the close yesterday. So we're pretty much at the lows of yesterday, actually. You're at a discounted level. Let me see how low the support goes from way back over here. Oh, okay, so let's hop on over to a 4-hour chart very fast. You're hovering around a support level here, which means either when it comes to Monday, oh no, is the market open Monday? I forgot. I think there was some type of holiday coming up. I'll have to double check it here. But basically, the next open trading day here, if we start breaking down from this, you're probably going to have a really rough ride for the next few weeks as far as Netflix is concerned. However, if you are able to bounce here, I think you can make your way back up to possibly the 330 level or so. I'm kind of worried as I see on the 4-hour chart all these death crosses kind of approaching over the next week. I'd be much more in the bearish camp than bullish camp on this one personally. But as I go over here to the daily one, you see the breakdown that occurred a while ago. That uptrend kind of ended, and let's go right here. The uptrend ended, and all of a sudden we're just kind of going more downward and kind of in a hurry too, if I do say so. We had that sell signal over here too that wasn't too well received. Maybe if you kind of adjust this trend line to be more like this for now, you might find some support somewhere around the $300 level. But I would most likely be looking to buy some puts the next trading day here, just because this looks like it wants to break down here. What I can do for you though is actually go back over here to Wesson. And I'll see if I can find some puts or calls for you on here. NFLX. Oh, wow. Not much stuff going on today as far as out of the money calls. So I'm looking right here, and let's zoom in right here. Yeah. Oh, that's kind of too cluttered up here. But you can see these Netflix 3.3, so that's next couple weeks from now. 224. That's today. Those already expired. So 327 strike price. The current price here for this is 317. So they're not expecting it to go higher by much. So I'm guessing they're buying them now in anticipation for that bump that we were just talking about here at that support level. And they might just sell them come Monday or Tuesday whenever the market opens back up. And probably you can see right up here at 327. They're playing it very safe, but it looks like they're just doing a 1 to 2 day trade here. And I would say that's probably an okay move to do. Risky, but okay. The overall market, again, you see the NASDAQ and the SPY, they're both holding up against those 200 daily moving averages right now. I would expect they're hoping for a 1 day bounce, and then we continue on that downtrend. So they could make a quick buck here very, very quickly. If we can go over here, though, let's see the 325 strike price here. Let's go to the chart. So they bought it at an entry price of $450, and currently it's at $338. So they have lost quite a bit of money off of this already. So they must be really hoping that we have a pretty solid move going on to next week. So let me go over here very fast. So yeah, let's see if I can do this right here. And what did we just talk about here? 470, 338. So yeah, it's already down 28% in 1 day. They must be really hoping for a larger move to come along Monday or Tuesday, okay? On the other hand, again, they're both at support levels, and just like the SPY and NASDAQ, they're also at those support levels as well. Hopefully, we could have at least a 1 day bounce here, and I think they're just trying to play this for maybe 1 to 2 days. Not a bad move, but man, if we have a big capitulation moment or some really bad news over the weekend, things are not going to go their way on Netflix. It's a risky time to be investing at this point. There we go. Smith & Wesson for a possible breakout, SWBI. Let's go to the weekly first. Let's see. Oh, this has been an interesting one. Okay, let's go to the daily though. There was a buy signal right there that worked out pretty well. The 20 is still coming up pretty fine. No death crosses inbound. The trends are still looking strong. What do you have for resistance up here? Basically 1130 it looks like. Up here around 1112. I would be okay with playing with this breakout here. I might try to find a smaller breakout right here on this one though, right there. If we're not able to break out above this on the daily chart, I think you may have some more concerns. Let me go over here to the daily chart. Oh, we did break out above, so I got to move this up a little bit more here. There it is. Okay, 11:15. Yeah, okay. If we're not able to break above that, I probably, there's going to be no breakout, obviously, but I'd be more concerned that you have some type of double top here and we have a breakdown right here around 10:59, and that would bring you all the way back down here just to around the $10 level, maybe as far down as like 987. I'd probably say just down here to 10:15. But if you are able to make a breakout, I would say from this larger trend line going back all the way over here to December 5th, it looks like, I would start scaling out, around 11:50, and then from there try to see if we can get back up here to 12:30. But after that, I think you actually have a pretty clear shot at this upper trend line level over here on 12:50 or so. Maybe a wick, because I don't know if it's actually going to be able to close above the 200 daily moving average. But I think you would have a clean opportunity to at least start to play for that 12 level. So maybe you buy around 11:30 if it breaks out, maybe 11:30, 11:40. From there, you have a small scale to 11:60, and from there, you're really just looking for that larger level of around 12:25. At a certain point, you have to really think about, do you really want to scale out here, or if you just want it to go a little bit further up, okay? For me, at this point in time, I'd probably just take the larger gamble here because you're probably not going to be playing options, just going to be, buying some shares, and try to see if it gets back up here to at least $12. So you'd be looking at about like 70 cents per share. I think that'd be perfectly fine as far as this trade's concerned. Let's see how this worked out before. Change of character right there. Wowza, yeah. Let me go over here to the 15 very fast. Not much volatility here. Not much resistance. Okay, yeah. I would give it a shot. I think there's a good opportunity this can break out, even if the overall market isn't working in its favor. These guys are making tons of money because apparently, I don't know if they have any contracts with the government, but I think they do. I believe Ukraine is in desperate need of ammo, and we're trying to produce as much ammo as we can and weapons at this point for Ukraine. Because I guess they're going through bullets like crazy. They're going through weapons like crazy right now. All right, there we go. And hey, Tony, the numbers are cooked by the Biden administration, Michael. The jobs numbers. What do you call? I don't even know how those jobs numbers are being calculated right now. The reason I think the jobs numbers as far as the new hires are doing pretty well month over month is because I believe that people are looking for new jobs frantically right now because people are getting laid off and then they find a new job, they get laid off, they find another job, or people are starting to burn through their savings and they're realizing that they need to find another job here. Because the way I look at it, guys, in realistic terms here, very, very realistic terms, not people don't like to move when they can't afford their current lifestyle. They would rather work more, to pay for their current lifestyle rather than leaving their current lifestyle and having to find an apartment that's much cheaper. Because if you guys think about it, people moved a few years ago, back around COVID or 2019, back during the golden years of like maybe 2018 to 2020 before things kind of really got messed up, and then COVID, forced everybody to leave the cities for the most part. A lot of people. If I got laid off and I was in the city and I had my like $2,000 rent apartment or $3,000 rent apartment, I could maybe find another job that paid me similar, but maybe it's a little bit less. Maybe I have to take on a part-time job, or maybe I have to do a little bit more work there. And that little bit more, that extra job really counts as an extra job for the job market here. There's a number, and I always forget what it's called, or there's a number, a way to quantify those jobs. But over the past few months, you've seen a lot of people get new jobs and quit their jobs. And the fact that people are moving left and right because the job market is still tight kind of makes you believe that there's more jobs being created when there's not. So yeah, the jobs numbers can be misleading, but it's still nice that people can try to go out there and find a job. I know people right now who can't even find a job if they wanted to. So it kind of depends on where you live at this point, right? Let's see. Let me try to find it over here while watching the Bitcoin chart, because Bitcoin could break down at any moment at this point, because it still looks like Bitcoin wants to go down further to the 22,000s. How many people? Let's see. I'm going to see if I can find this out. Okay. Okay, so as Bitcoin kind of heads down a little bit, you guys can see this just a little bit here. Let me just move it over here so it can be in the middle of the screen. Household survey data, both the unemployment rate at 3.4% and the total number of unemployed persons at 5 million changed little in January, right? So unemployed people still stayed the same even though we added like 500,000 jobs. That tells you something right there, okay? The unemployment rate has shown little net movement since early 2022. See table, yeah. Among the major worker groups, the unemployment rates for adult men 3.2%, adult women 3.1%, teenagers 10.3%, whites 3.1%, blacks 5.4%, Asians 2.8%, and Hispanics 4.5% showed little change in January as well. I guess, right? So let me go down to here. We don't have to read all this stuff here. I want to look at the tables. There we go. So jobs were up a little bit more. Okay, difference not by much. And these are in thousands, right? Yeah, okay. Month over month. This isn't the table we're looking for, though. Let's plop this back over here very fast. And civil non-institution population. Wow, they make this table really wide, don't they? Oh, I'm zoomed in, and I. No, this isn't it either. Oh, not in labor force. Let's see. Total. There's a lot of women not in the labor force. A lot of white people not in the labor force, or decreased and moved out of labor force. Oh, Black African American. So you're seeing the labor force actually go down a little bit. Oh, that's interesting. So I won't say they're cooked, but the way they're represented is definitely not honest, I guess you would say, right? But again, something that the news will do regularly, and I think you guys will understand this, is they will try to not talk us into a recession. So they might go say, hey, you know, we got to keep this news as positive as possible, keep a positive spin, and then we won't have this bad thing happen perhaps. If you guys remember back when we were having, when we entered our first recession here, as far as a technical recession with the GDP and 2 negative quarters of GDP, deceleration or shrinkage, contraction, there you go. Remember, they tried to change the definition of what recession was to make sure that, well, maybe the midterms would be a little bit better for Biden, but really they didn't want anybody to panic, right? Those things happen. We haven't seen them happening this much. I've never seen them try to change the term of a recession while we were actually having a recession. But you know, at the same time, you know, eventually the economic data is gonna catch up to where everybody else is going, right? Or what the reality. They can try to say the consumer is strong, the economy is great, the economy is great. If you ask most people around America, they're gonna ask that they're gonna say that the economy is not great, even though all the people in DC are screaming, "It's great, it's great, it's great, it's great." You're gonna hear it on all the major news networks. It's great, it's great, it's great. It's not doing too great, right? We just kind of have to live with it at this point. I don't think many people will actually fight back against that system, and I think it's probably unwise to fight back against that system at this point, but just because, like, I feel like unless you're a big celebrity or you have a big following already on social media, if you do that, it's very easy for your channel or your platform to kind of just delist you and say, hey, oh, you did something very, very wrong under paragraph C, section 8, Title 5. I don't know what it is, but you know what I mean. So I don't think people will, I don't even want to go down that rabbit hole as far as like diving into it for a whole day, let alone a few more minutes. But yeah, it can be an issue for sure. Netflix puts, hey Ken, Netflix puts would be fine if you want to go down that road. Just make sure you see that breakdown occur before you actually start loading up on those puts, okay? Is it all pricing already, or is this the tip of the iceberg for the downturn? I don't know if it's the tip of the iceberg for the downturn. I personally expect this to break down below the October lows, okay? So as far as the NASDAQ, and you guys, let's go over to the weekly charts here. Let me get rid of all this stuff, and Loki says hello. Hello. Yeah. Doop-a-doop. There you go. As far as the lows we had back over here in October, I expect us to break down below these lows before the end of the year. All right. Now, when the Nasdaq breaks down below these lows, when the SPY breaks down below these lows, I'm going to start to do a lot more aggressive dollar cost averaging, but that's a massive gamble on my part. If we don't go down to those lows and somehow we just find a way to keep on going up, I will be chasing the market, which I will really regret. But personally, to me, the way I see the economy going, it's going in the wrong direction. It's not going in the right direction. And what kind of makes me believe that even more now is, again, America and China are about to get into like another economic spat. So we're going to start placing sanctions on Chinese companies, and you think China is just going to take that? No, they're going to start hurting our us economically too. And again, what happens when us and China go to these little economic tit for tats? What happens? At the end of the day, what happens? Prices go up. What does that mean? Inflation goes up. If inflation goes up, what happens? We have to add more rate hikes possibly, or we just have to keep the rate hikes the next 2 or 3 we're going to have already. We're going to have to keep them locked in at that level for a longer period of time, causing more restrictive monetary policy for the entire market. It's not good. It's not good at all. So the more, we escalate things with China escalates stuff with us, Russia escalates against Ukraine, the West escalates against Russia, right? This whole cycle is just not going to end well for anybody. Because remember, we put our name behind Ukraine. Ukraine is like a proxy fight for us right now between the West and Russia. Both are trying to wear down the other powers' economy, right? So we've been trying to wear down, the rupee or the ruble, in Russia, and just try to pound it. Their economy is not doing great, but it's not doing as terrible as we thought it was going to be doing, because a lot of other countries have been buying up a lot of the oil that would be going to Europe at a discount, like India, China, and so forth. Okay, now when we talk about like this global thing, China doesn't want to see Russia collapse. That's kind of an ally to them, not a friend, like not a real ally, but you'd rather have a communist Russia or a non-democratic Russia compared to a democratic Russia on your borders. I think that's safe to say, right? But how do I just want to say this and sum it all up? If China enters on the side of Russia, Russia is going to be boosted a lot with all this new armament and whatever the Chinese are willing to give some drones, whatever. I heard drones and like bullets or something could be on the table here. So if we escalate this here, both sides, inflation is going to keep on getting up. It's going to get worse and worse and worse. I just don't know exactly right now what those sectors are going to be. But you can see right here, a top State Department official on Thursday said a sanctions package coinciding with the 1-year mark of Russia's war in Ukraine will include Chinese companies that the Biden administration says are violating export bans against Moscow. All right, so going to be going up against Chinese companies. Well, guess what? What American companies can China go after? A lot. Okay. There will be in the sanctions package that we will be announcing tomorrow on the 1-year anniversary of the war. We will also be putting other constraints on the entities Chinese-based or Chinese subs of entities in Europe, which we think are actively evading sanctions, Newland said during the Washington Post live event on Thursday. Okay, so again, that's not good. That's not what we want to hear at this point. We want to be hearing that the temperature is coming down. The temperature is not coming down at all. It's going up. China put out some type of peace plan between Russia and Ukraine today, and the the West was like, hell no, right? And it's just nobody's thinking about peace right now. Nobody wants peace right now, unless it's like a full capitulationary peace. So basically, Russia wants all of Ukraine. We get all this and the war is over. Yahoo! The West says no. We want everything. We want you to leave all of Ukraine, and we want the Crimea back as well. And then boom, it's just not a recipe for a good year as far as the stock market, the crypto markets are concerned. So that's what really concerns me going forward. And again, Bitcoin has never actually been through a major U.S. recession. We don't exactly know how all this is going to operate. When we have big events as far as the Nasdaq and the SPY and things like this. When we have these nasty downward moves like we have over here so far this last cycle, Well, when we go back over to other recession type events or financial crises, the financial crisis was pretty much just a dive bomb here. We normally don't have dive bombs like this, but the whole financial sector almost went kaput. Right? There was like literally a lack of liquidity in the market. Over here, this is more likely what we're going to see, this type of crazy moves, if we really do have a very bad recession. And on top of that, we have constrained monetary policy with higher rates. It's going to look pretty devastating for a while. People are banking on the Fed blinking at a certain point, saying, hey, the economy is bad enough. We have to be okay with higher inflation. But at the same time, we have to, just expect the economy to kind of suck for a while. So the average Joe is not going to have much money out there. But again, you see over here how during the last one, we had all the way back over here in 2000, skipping the 2008 financial crisis. You see how we had these huge big booms every now and again, huge big booms, and they just continue to go down a little bit more until we eventually capitulated. I think we're probably over here, kind of like the chart won't look anything like this at the end of the day, but we're probably somewhere in here, and then eventually we're going to come back down, break down below those lows, find some lows over here, then we'll start taking off again. But again, you see how long this took from the highs. This took about like 287 days. If we were to just add 287 days from the period we were just talking about, like right here just a few days ago, that's like November at the end of this year is when we actually might find some type of bottom. Like somewhere in there, maybe we find a bottom. I'm still looking at the weekly charts. I'm looking at a death cross coming between the 50-week moving average and the 200. Every time we have those, usually it's a bad experience for us. Bad experience there and a bad experience there. We'll have to wait and see. But the same thing, from the SPY, right? We have the COVID lows and some stuff like that. But really, financial crisis, we're used to stuff like this. Huge moves. Then we start to fall and break our backs on these charts. I'm waiting for the time when we break down below those October lows, because anytime I think we're below these October lows, I think just from a technical standpoint, is going to be a great opportunity to buy. I'm not entirely sure what Bitcoin's going to be doing during that time frame, though. I really don't know what Bitcoin's going to be doing. The more I think about it, the more Bitcoin has been kind of having its fun going up and down without the overall market here. So if like the global economy gets pretty bad and things like that, we'll probably end up going back down to like $12,000, $10,000 at the worst. But it'll be interesting. Remember, a lot of people have already called the bottom of this market. There's a lot of respectable technical analysis out, on the YouTube's thing, on YouTube, on TikTok, on Twitter, on CNBC, Fox Business. There's a lot of people that have called the October lows the lows that we're going to see for this entire bear market cycle, and we're not going to get anywhere close to those lows again. Okay. And they're respectable people. They're like much more knowledgeable about the markets than me. I have always used a term that I call street economics, where I can kind of see what's happening on the ground and see how people are really not doing so hot. And for me, I think that kind of outweighs sometimes the really bullish news that the news organizations kind of push out to everybody, if that makes sense. Because if you think about it, news by definition is just kind of a lagging thing. It's we don't talk about news that's upcoming that much. Most of the time, it's news that's already happened and they're reporting on it. And I think you see this a lot with CNBC, and I say CNBC because I watched it a lot. All throughout the last few days, when the Dow Jones was kind of going more sideways here, or just the NASDAQ here, going more sideways, before we started having these drops, they were still optimistic. They were talking about how there's going to be no recession, and there's going to be a soft landing where we everything works out in the end, and there's no recession, no big job losses, not like that. Okay. Now all of a sudden, just the market drops like what? Let's say from this high, like 5%, 5-6%. All of a sudden now they're saying, well, are we really going into recession? Is there not going to be a soft landing after all? And, how they sensationalize it a little bit. I think that's what kind of messes with people's brains a little bit nowadays, because you go day to day, they're just talking about a whole bunch of stuff. Meanwhile, I have a problem with something like in the same type of field. When I see something going sideways here, or something like this, when we're kind of going multiple days and we're in this resistance zone here, what did I say? guys, like not much has changed from yesterday. We're still going a little bit sideways. Am I buying right now? No, I'm not buying right now. If I'm going to be doing something, it'll be during day trading. And if I want to do a longer term trade, it'd be a short trade, right? And I said I'd do a short trade because we had talked about the sell signal that popped up here a few days ago right there. And I'm like, it usually works out pretty well. I'd be looking at it more of an opportunity to be selling at this point, especially because we're at these major levels of resistance. Rejected, 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 rejected. All right. How many times do you have to get rejected before you get the message? Some of you guys may need to learn that another way, right? But you know, I that's what kind of makes this YouTube thing kind of hard is I say a lot of the same stuff a lot because there's no reason for me to make up stuff to you guys. It's just like the same stuff's happening, but on the 15-minute chart or the hour chart, that's where things are changing left and right. But on the daily charts, the weekly charts, it's not all too crazy. Loki, what are you doing? Here, you want a head scratch? Okay. Loki's over here. He wants a little head scratch. There you go. Scratch behind the ear. Yeah, okay. There you go. All right. What's it here? On the long-term chart, we went slightly above the descending trend. We can't go back below it. Depends basically on what the economics news tells us at this point. I know we have a lot of strong levels of support, but it seems like this news that whenever we think about the Fed, people just overreact like crazy. Last Monday was a holiday. Hey, Rich, yeah, I was wondering if this Monday was a holiday or something else too, because I know this past Monday was President's Day. Have I done a video on puts and calls? Do you recommend one? I haven't done any videos on puts and calls personally. The one video I would just say give it a chance if you want to look at puts and calls, and they're not like my signals. If they're not my signals, if you just want to like learn more about them, it's the video that has like the bald guy like smiling like this. It's oh, he changed the thumbnail, but it's this one right here. Options trading for beginners. It's like 3 hours long. I'd watch this one and just kind of skim until you actually see it. It says 34 chapters, call option introduction, and then it has a couple of examples, and it probably goes to puts right here. No, it's a couple right there, and then put option. Yeah, I'd say just kind of click around here and you see some good stuff here. The channel's pretty big though. This video has like 15 million views. It's a very, 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 very big channel. Yep. I wouldn't watch the whole thing. There's a lot of stuff in there that it's not going to help you become full-time. But if you just want to learn to see what calls and options are, I would say go for it. Another easy way to go through it, and I did this with a friend the other day. If you go to ChatGPT of all places and just ask them to explain options to you like you're a child, it really does give a good explanation. I've been using it for what do you call it? I've been using it for one of my tutorials here. So let me go over here to ChatGPT for you. I pay for premium so I could use it as much as I want. Can you explain? Oops. I am a child. There you go. All right. So let me zoom in here a little bit more for you guys. There you go. There you go. Think of it like this. Imagine you have a toy you really love, but you're not sure if you want to keep it forever. So you let your friend borrow it for a while, but you tell them that if you ever decide you want it back, you can call it back and they have to give it back to you. In the world of finance, an options call works in similar ways. When you buy a call option, you're essentially buying the right, not the obligation, to buy a stock or another financial asset at a certain price, known as the strike price. It'll go on and on and on. And then if you have any more questions off of this, you can say, can I have another more detailed example? I would ask it to show you the house example or a car example, not a car example, usually a house example or something like that. And it can be very, very useful. I'd say ChatGPT can really explain it better than the YouTube video guy can. But it's better if the video is better if like visual help when actually understanding stuff. But if you specifically tell it to dumb it down for you, I'd recommend that for everything on ChatGPT. Dumb down this finance term, dumb down this, because sometimes it just assumes you're some type of expert when you're asking some type of question about finance when most people are not, you know. You could even ask it to tell you how to do it like you were from the ghetto. So it can actually talk to you in a ghetto voice. Like ChatGPT can do a lot of stuff. It's by no means perfect, but it does a really good job. And when it comes to talking about that type of stuff, it does a very, very solid job here. And hey, Tony, are they counting jobs lost? Not really on some of those metrics, no. Usually they're just counting new jobs that come along. Within the data, you may be able to find it, but most of the time they've changed the way they report some of those jobs numbers and their inflation numbers, to be frank. Hey, no worries, my man. Verity, happy to see you back. Hi, Michael. What do you see PXC in the next 6 months, 1 year? That really depends on how bad the economy gets. But let's talk about it here. We haven't talked about PXC in a hot minute. All right, there we go. So basically what happened at PXD today was your typical breakdown here. We had a few different breakdowns over the past few weeks, right? This was probably the larger breakdown if you guys were listening to what we were talking about. On the weekly chart, you did have that sell signal there. Now that we're starting to use this a little bit more. At this point, I would expect it at worst to come back down here towards 135 or so. In the meantime, though, I probably wouldn't expect it to get down below like 170. I'm in this for the long haul as far as dividends, but if you're talking about a year from now and the economy is pretty rough, I would say at the worst it's around 140. If for whatever reason we have a more bustling economy, and I guess a year from now, like probably like a year and a half if we're out of the recession and such, I would say we're probably going to be somewhere around here between $200 and $270, back within this trading range way up here. I don't think we're going to see new highs unless something really crazy happens in the overall natural gas market. Right now, natural gas is what's plaguing this just a little bit. If we go over here to talk about UNG, UNG is definitely just having a very rough few weeks here, and that's bringing down their profits a bit. PXD though, it's much more of a dividend play. So if you don't want to hold the asset through like the big waves, which are going to be big waves here in the oil sector, like you see, what are we talking about right here? There you go. Let's go to some of these other plays here. You see the Conocos and stuff also getting ready to break down higher, probably to the 98 level. The XY, we don't talk about XY, DVN, stuff like that. They're all starting to show these weaknesses here. If you, slowing economy type of talk, okay? If you don't want to hold them, or you don't think the dividends are worth holding them for an extended period of time, I would say make sure you have some type of stop loss there. To me, though, they're long-term dividend plays, and PXD in particular has like an 11% dividend, I believe. So PXD, not PCD. PXD. There you go. You're looking at a dividend of around 13.26%. That's primarily why I hold it, and I've been holding this for a while now. But again, as time goes on, if you guys are more concerned about it, again, watch out for it to see if we break down, I guess, around that 190 level. But if it does, you might consider that, hey, like, you know what, I wanted to pay some dividends. I may make 1 quarter to the dividends, but maybe I don't want to hold throughout the whole cycle of a bear market with a recession, and then I don't want to wait for it to come all the way back up, right? Especially as you're seeing on the weekly chart here, you're seeing more of a death cross. You could probably see more downside for this in the short term here, okay? Definitely more downside than upside. Maybe as rates go higher, maybe you want to be looking at banks instead. Banks usually do okay during high interest rate environments, so maybe you're going to be looking for more of a bank idea for those dividend plays if you want to see your stock value go up while the dividend is also staying strong. Back over here to the 15. There we go. All right. There we go. Okay. And hey, Cape Cod, hope you're doing well. Oh, and Cape Cod Mama, let me see if I can pull this up right here and just show it to you very fast. I ended up making that tutorial for you guys. I think Miss K was looking for it too. This will be going live tomorrow at 8 a.m. my time, so around 12 o'clock, I think, the East Coast. But basically, I made a 35-minute tutorial about how to use the price action indicator tool, how to set it up, and the same thing as before. For this one, though, I went, I guess, a little bit more detail about the alerts and stuff, because this has alerts built into it. This is the 3rd attempt I made to make the video. My microphone over the last few days, guys, was just driving me nuts. It was the worst audio quality you could ever imagine. I put out a video yesterday, and it barely made the cut for me to actually even want to put it up. But apparently when I updated my computer, shut down and update, it messed up my microphone somehow. So I had to shut down my computer again after trying a whole bunch of other stuff, like just restart it, and then it started working again. But all through yesterday, I was trying to talk through this microphone and get ready for the stream, but it kept on coming as some type of crackly mess where only parts of the signals were coming through. So and I even brought up my backup mic to see if another mic would work, and it didn't work as well. So I knew it had to be something with computer here, thank God, or the wires. So what do you call it? It was horrible. But imagine recording a 40-minute video, 30-minute video twice, and each time after you're done recording it, you realize that the sound is horrible quality. That's what happened to me. But the video will come out tomorrow. I'll let you guys know more about it. I'll make sure to repost it, put it on Twitter and stuff like that. Do a post on it on YouTube as well. But it's 35 minutes and it teaches you guys everything you need to know about those buy and sell signals there to give you guys some money. And hey, Skull Guy, happy to see you back, man. Let me know if you have any questions. I know there's a lot of fear about a 50 basis point hike, but in my opinion, they can't do that because they will lose credibility they have left. I mean, everything that I've heard from the Fed over the past few months would suggest that they're going to be doing another 25 basis point rate hike and then another 25 basis point rate hike after that, probably. The other 25 basis rate hike I think is probably more new because we just had one last month. We're going to have one next month. If we have another one after that, it's going to be because inflation remains to be sticky. Most likely we'll have the extra one because inflation has been sticky. And if we start ratcheting this stuff up with China again, that's going to cause inflation to go up as we start to get into more of an economic trade war, like heading into a recession. How stupid of an idea is that? For Ukraine, it doesn't make sense from our national interest perspective, right? But I think, I don't know how aggressive we can be when it comes to this trade war with China because we're about to enter into an election year. And that means politicians are going to be spending a lot of time here in America and going zigzagging. Like DeSantis is already going across the country. Trump just went to Ohio to bring attention to the railroad stuff, right? I think we saw Mike Pence today on CNBC. We're seeing people kind of start to get ready for the big move. Gavin Newsom has been traveling around a little bit. You've seen a lot of action for the California Senate race coming up since Feinstein's retiring. You can't go into an election year with a horrible economy, and I think Joe Biden knows that. And, when you think about what Joe Biden's thought process is he thinks that at this point, MAGA Republicans control the Republican Party. They're a threat to the future of America, right? And he has to do whatever he can do to stop Donald Trump or any MAGA Republican from getting elected into the presidency. I wonder if he's going to prioritize a good economy to kind of win the re-election, or if he'll try to go down this path of escalation and kind of the circle of escalation going on between Europe, America, China, and Russia. How is that going to work out? Because at this point, guys, Ukraine is more of just a pawn. They're just kind of a pawn. I don't know another way to say it. The West is using them, and they're doing a pretty good job of it. At this point, Russia is like decimated. The military is like, it's kind of disgraceful. Russia's military at this point. China is getting ready to probably start entering into not the fighting, but just giving lethal aid. It looks like that's what our intelligence has been saying, and I trust our intelligence for the most part. So we're about to hit another level of escalation here, and I just don't know at the end of the day how all this works during an election year when the economy already sucks. Joe Biden's approval rating is so low, so maybe that's a little bit of a little bit of an optimistic view for the markets, because Joe Biden's approval rating is not good. I think we looked at this the other day. Joe Biden approval. How popular is Joe Biden? You go to all polls of adults. Just adults, not voters, just adults. He has a popularity rating or approval rating of 42.4%. That's really bad. Only 4 in 10 Americans actually like the guy, approve of the job he's doing. I wouldn't say that's, a really good job, guys. Right? That's not what you want to see going into an election year at all. Now, we'll see if this changes up anything before, but remember, we just had an election where I think Republicans did worse than expected, I think. But next time, Joe Biden isn't going to be not running. He's going to be the focal point of the election cycle. It'll be Biden, perhaps, or I don't know if he's going to run again, but I think it's going to probably be Biden versus a Trump, a DeSantis, a Nikki Haley, I don't know any other Republicans out there, but, Mike Pompeo, somebody, a Republican out there, and it's going to be a big, big fight. And I just don't know, how that's going to work. Like, how Biden compares with previous presidents. Like at this point, let's go back over here. At this point, he's kind of around where Trump was. He's way below where Obama was. He's way below where George Bush is. Way below Clinton. Way below the other George W. Bush. Well below Ronald Reagan. No, he's above where Reagan was, actually. He's below where Richard Nixon was. Below where Ford was, and below where Jimmy Carter was. He was below Jimmy Carter. Jimmy Carter was not the best president, as you guys know. Good person, but not a good president. So, even Lyndon B. Johnson is above him at this point. Kennedy was above him. Eisenhower was above him. And Harry S. Truman was well above him. I mean, that's Truman, though. It's war. So, historically, he's like one of the most unfavorable presidents in modern history. Same with Trump. But what do you call it? Trump had to deal with COVID, and Trump was just kind of like a tweeter. I think that's what you call them, tweeters. But I don't think, to go to your main question, I don't think they're going to be raising interest rates by 50 basis points. I would assume it's going to be 25, and then they're going to stop, or they're going to do another 25 after that. If we have to do another 25 after that, like so we have like this, the one we just had, plus this next upcoming one, and then another one, and then another one, the economy would go straight like to crap shit. It'd be over. Bitcoin is still too sensitive, unlike gold. Yeah, Bitcoin's always going to be sensitive, in my opinion, until we get some big regulations. And hey, Chef, man, dude, I'm glad you got off work early. I almost wasn't able to do this stream. I had been scrambling to try to fix my microphone. It was god awful today, guys. Like, here, let me see if I can play the audio for you guys. Let me go over here to monetization, over here to my desktop. I'm opening up a file on the side here. So guys, listen to this. This was my audio. If I can find it here, there's some stuff I was talking about with a few other friends and coding stuff. ChatGPT and how to make the most of it. Okay. I don't know if you guys are going to be able to hear this properly, but maybe you guys can. Listen to this. Hey everyone, this is a test to test out the audio quality of my microphone. I was talking the same tone the entire time. You can hear how like choppy that was. It was horrible. It was horrible. I never want to do it again. Never. I never want to have that problem again. Excuse me. And hey, Chris, and of course they say it's going to soft land, not because it's their job to, until it will not happen. They will still tell, doesn't matter what happens. Oh yeah, what do you call it? I don't really trust the people that are saying, the government officials saying it's going to be a soft landing. Usually they're not too honest about all that type of stuff. Let's go over here very fast. How do I do this? There you go. Okay. But yeah, I usually don't trust the government to give me adequate information. And I think that's a really sad thing. I think that's really sad. But yeah, I don't trust the government too much. I tend to believe what my eyes and senses were telling me for the most part. Remember all the stuff we just saw over here with the, what we just saw with, move my phone down. What we just saw with the East Palestine stuff, right? They said the water was clean, the creeks were clean, and all of a sudden you just start to see like congressmen and women or the local news drag their sticks or throw bricks into the water, and you're just like, what the hell is that? Definitely not that good. Unfortunately, I feel like a dip to 12K is right around the corner. Hey, Jay, I'm hoping you're wrong. Like, I think we could honestly get down that low, but I don't see it happening at least until like Q2, Q3. But if you mean by around the corner, it's just like a few months away. There's always that possibility for sure. But again, we'll have to see. Like, to me, it feels weird that I'm one of those people on YouTube, and I guess I don't talk about it too much on Twitter. I'm one of those people who still thinks we have further to go in this bear market or this current market environment, where I think the majority of people right now still feel like we've faced the lows, we have the lows, and we're only going to go higher from those lows, even though we might get a little bit more choppy at the end of the day. Like, so you might see more choppiness, but we're not going to break down below those October lows, or for Bitcoin, the November lows, or the FTX lows, whatever. I'm very curious to see what ends up happening. If we end up breaking down below the October lows for the stock market, I'm going to brag. Because people like Jim Cramer said we're in a bull market now. Oh my God. That probably made me more optimistic than anything else. Just be careful. Even if we drop for Bitcoin, you can just hold and buy again. Oh yeah, I'm dollar cost averaging every single time we get a nice little dip here. I don't feel a reason to be selling any of my long-term positions unless it was like this 25,000 that we saw for the last few days. I don't feel like there's a big reason for me to be selling anything. And for most of you guys to be selling, but if you guys have your own strategies, you guys will be fine. What do you think about the car market and interest on loaning a car? Do tutorials and technical? Oh, there's two different questions. The car market. So the used car market is hurting a few different name brands out there, some companies out there, because last year the price of cars with inflation was so high, so expensive, that they ended up trading in cars or buying cars to resell at a higher price, and they paid a lot of money for those cars because, again, there was a high demand for used cars. Now that the car market is kind of cooling off quite a bit, they're being forced to take a loss by selling those used cars for less than they were bought for, which is never a good thing, right? It's a loss on your investment, so to speak. Now, going over to interest, it does make it more difficult to buy a car if you're going to have to pay more for the loan on the car. I think eventually you're going to see people stop buying new cars. I'm one of those people who don't usually like getting new cars. I've bought 2 cars in my life. I'm 28. My first one was a 1994 Ford Explorer. Before that, I was gifted a car when I was in high school, which was like a 1980 like Chevy stick shift truck. It was old, but it got me to point A to point B. Remember, I didn't grow up rich. And then once I got out of college, I bought myself, this was in 2016, 2017 or something like that. I bought myself a 2012 used Ford Fusion for like $4,000, $4,500, a really good steal. There were some mechanical issues with the car, but I just fixed them up myself, and like literally it was like some really simple stuff. Yeah, I still have that car to the day. I bought it for like $4,000 when it had like 60,000 miles, something like that. $4,000. Ford Fusion, all the bells and whistles. So I had like the heated seats, the Sony surround sound system, navigation, GPS, LED lights on the inside. I had everything I ever kind of wanted in a car. And now I'm driving the car and it has like 250,000 miles on it. I've treated that thing well. I've made sure to maintain it very well, and $4,000 with, let's say, probably $1,000 in like maintenance besides the oil changes is probably like another $500 to $1,000 in total. I've saved so much money on that. Are you kidding me? I think people will start to realize that they don't need cars. They don't need to get the newest car every month, especially during a kind of a more turbulent economic period. But the concerning news to me has mostly been that we've been seeing a lot more people go delinquent on their car payments, so they just can't afford their car anymore after they started to pay these huge payments. So like normally, I have friends that have car payments that are over $1,000 a month. You know how like ludicrous that is to me? Like to me, maybe $300 to $400 a month for a car payment seems perfectly rational. Then you add on a couple $100 of insurance. That's a rational amount of money. Like for me, and I make over $100,000 a year. Like I just don't see the point in buying the nicest, fanciest new car out there. But again, I don't drive too much. I literally drive to the dog park, to the beach, to the national parks, and to Seattle. That's where I drive. I don't go on massive road trips. If I do, I take my car, but I get a little bit of a tune-up at my favorite mechanic off of Meridian Way, and life is, I don't got to do much for it. I don't know. People have been really doing some weird stuff with purchases this year. Do tutorials on technical analysis and teaching us about the news on how it affects the market? Oh, you talking to me like do tutorials on technical analysis? I have a bunch of them, and I've been building out a playlist too. A lot of the tools I've been teaching you guys as of late have been indicators. So if you guys go over to my page here, let me go over here very fast. Let me drag and drop this so I can just open it up here. If you guys go over here to my main page, my main page right here, and you scroll down, you're going to see best TradingView indicators for in 2023. This is a playlist right here, and it has my videos and it has other people's videos inside of it. So if you guys click on this playlist, you guys will see all these videos. Oh, there should be more indicators on here. Yeah, see, trading tutorials for beginners. Sorry, trading tutorials for beginners. This is best TradingView indicators for 2023. It's right here. Trading tutorials for beginners. Sorry, messed up that right here. Okay, and you'll see me right there. But if you guys look on the right-hand side right here, I'll zoom in a little bit. All right, you'll see this one right here by me. This next video is by Lux Algo. This next one is by My Trading Journal. I don't care if you guys watch other people's channels. I've never been that YouTuber that says, only watch me, you have to watch me. I will put other people's videos in my tutorials here so you guys can look. So you got one from Lux Algo, My Trading Journal, MDX Crypto, Lux Algo again, me, Trading Lab, So Am Jenna, Trading Lab, me again, Power Trading, Switch Stats, Borsa, me again, or My Trading Journey, Meet Kaplan, Power of Trading, Max Trading, then there's me, Power of Trading. So there's a whole bunch of videos in here. Not all of them belong to me, okay? A lot of them do, but not all of them. So I want you, and I will add to this as I see fit, and I will adjust things as I see fit for you guys, okay? I'll put on maybe an options video or something like that, or a trading the chart tutorial or something like that to get you guys going. But yeah, I have tons of like links and opportunities for you guys to learn on the channel. You just got to go find it. And it can be hard to find it sometimes, that's for sure. Sorry guys, my eyes are getting a little bit of allergies or something in them right now. Something's irritating them. Ugh, all right, there we go. Oh, my glasses are dirty. That's what it is. All right. Nice, Mike. Thank you. And sorry your mic was messed up or computer, or we know we appreciate the hard work. Yeah, I appreciate it. It was basically just the computer was messing up. And I guess what was happening was, since I updated my computer, like, when it says shut down and update your computer, that update messed up my software for my microphone. And so I basically just had to restart my computer and to fix it. But I didn't know I had to restart my computer. So I was going through all my files. I was going through like my Streamlabs, and I was going over here to like my Yeti settings, and I have a bunch of filters over here. Not this one. That's good. Yeah, to the filters and stuff. And I used to have like 10 filters. Because I wanted to stream tonight, I only have 3. There was like more like 7 filters. But yeah, now you guys are just listening to me with a few. I had to go back in here and change some of this stuff up. I forget what the tool was though. I don't know if I have my equalizer actually on here. Is my equalizer on here? No, it's files. I don't even know where my equalizer is at this point. Oh, there it is. Okay, you see? My equalizer up. I had to change this a little bit. I still have to change this a little bit more here. But yeah, it was a process, guys. It was a freaking process to get everything back up and running. But I wanted to stream, so it's been a pretty good day overall. AMP has recently been making some moves since it's been delisted. Do you see a future for this project? Project, yes. Should I be investing in it? Probably not. Like, if you have any money, like, in there, like a couple $100 or just $50, and you have it in AMP, sure, I would just keep it in there and see if it comes back in the future. But you might not be able to have it on the exchange of your choice. You might have to go through some, like, weird exchange in another country to get to it, okay? I think the project may find a way to survive, but that's only if they have... Sorry, Loki's over here. You can see his little mouth. I only think that's if, depending on how the developers are getting paid. Were they getting paid in the token or the coin, or were they getting paid in cash or some other type of, like, monetary denomination, some other currency? if they were getting paid in the coins, the project probably won't survive then unless they have some type of lucrative deals where their product is being used, they're getting some type of income that's not coming from the token. So I would say you would have to look into that. I'm not entirely sure at this point in time, but if I had like a couple $100 in there, I wouldn't care. I would just leave it in there to see what happens. But if you like just don't want to take the chance and you want to just put it towards something else, you probably make more money by just taking the money out and investing it in Ethereum and holding on to it for the long term. Dude, you are clawing into my side. You got some sharp nails, dude. Yeah, too much playing with the rocks. Do you want a treat? Is that what you're asking for? You gotta sit. Come here. All right, up. All right. See, I think most people think we have a long way to go in the bear market with the possibility of recession for sure. It's impossible to be bullish right now, even though I want it so badly to be. I mean, that's the way I'm feeling about it, everybody. But again, at the same time, you go on the TV and they like for the last like month, they were talking about how the bull market is started and the bear market's over. Like any day you went on CNBC and you hopped on there, they were just not having it as far as any bearish news. It was all goldy, sunshine and the rainbows as far as they're concerned. And we can watch the second chart for a little bit. We haven't looked at the second chart in a hot minute. Oh, this isn't the right second chart here. Is it this? Yeah, it's the right second chart. Okay. Again, I just, it's been so weird to see them so bullish on a market where, it's like, I don't know. I would have been taking the opportunity to sell some of the stuff that I bought over the past few months, and then I want to buy it down lower. That was my strategy. I sold some of my Amazon, I sold some of my Microsoft, and I sold some of my Facebook, right? Meta. Normally I don't even sell my long-term stuff, but I felt like it was too good to be true, and I may be a fool in a few weeks if we continue to rise higher, right? But again, there's a lot of people out there, like big money, big hedge fund people are saying the bull market's saying we're not going back down forever. It's just really crazy talk. But to me, it's crazy. To them, it seems like rational, right? Hey, Mr. Tinker, happy to see you back, man. I'm meeting with my friend, and I'm meeting my friend from Philadelphia in Vegas next month. Do you think they would start a draft in World War III? No, because America would rebel if they did that. So I think you would have to have a just cause if you wanted to have a draft, right? To me, and I think to the majority of Americans, Ukraine is not worth sending Americans over to die for. At the end of the day, push come to shove, we are a democracy. They can try to do something like that. It wouldn't work over well. And you guys have to remember how many guns are in this country now. A lot. They would have a lot of trouble dealing with some type of situation like that. I think you might see a lot of people enlist to help support the country, but I don't think people want to be drafted in a war to protect Ukraine. Maybe England, a long-serving ally, maybe Europe if it came down to Europe. But if we're going to go to war over Ukraine, remember before Trump had his impeachment stuff about Ukraine, we thought Ukraine was shit. We one of the most corrupt Eastern countries out there, Eastern European countries out there. We didn't like them. Black people didn't like them because they're really racist towards African Americans and Africans. Our mindset on Ukraine is warped so fast from the Trump years where we didn't like them. Republicans didn't like them because we thought they were corrupt and they had some dirt on Joe Biden's son. Democrats didn't like them because they were very, very, very corrupt. People still kind of remember those tendencies and how we talked about stuff. I remember I was visiting my mom, I think at the hospital when the Ukraine war started, and it was right before I went live with you guys, and I was talking with her, and we were talking about seeing the stories of the Ukrainians not letting black people get on the trains to leave the country. You know how everybody was evacuating? They wouldn't let black people on the trains because they didn't think they were worth it. I don't really have much sympathy for them. You know, like maybe the kids, sure, but their parents, not so much. I really don't. Do I think what Russia's doing is horrible? Of course. But do I really want to, like, do I think there's an equivalency between our lives and their lives? Or do I think the state should put American lives in danger for Ukrainian ones? No, I don't. But if the state decides to do that, there's going to be a lot of pushback from, I think, the majority of the country. And I think that's where you start to see politicians, like, go back to their own national, like their own personal interests of getting reelected and saying, hey, no, no, no. And, you know, I think there'd be some type of legislative action to kind of stop that from happening, unless the president did some type of huge, like, martial law, Congress isn't needed for right now, something really stupid like that, in which case, I don't even know if the military would side with Joe Biden or they would side with Congress. Who knows at that point, right? But I don't think that question's ever going to, like, I don't think we're actually going to have a draft if that was the case. I think at this point, if we do get into a world war with Russia, I don't, like, it would be more of a nuclear one than a ground one, because, like, what can they fight us with? Like, honestly, what can they fight us with at this point? We have all of NATO. I don't think China might enter the war, but again, it would most likely be some type of nuclear war where the amount of troops really didn't matter, and we would just kind of go all poof, you know, all poof. Happy thoughts. Remember the title of this show today? Happy thoughts. Happy thoughts. SPY will make it back down to 330 or lower, sadly. Well, yeah, like what I've been saying, Cape Cod, is this. So if we go over here and look at stuff like Apple or Microsoft or anything really out there, what have I been talking about as far as my levels where I want to start buying Apple up? It's been around the 120 level, which we didn't get down to, but the 125 level we hit. But I really want to see if I can buy Apple around $100. And at the worst, I was thinking maybe I can buy Apple somewhere down here at 80. And this is like really, really bad territory. Like this is something like really, really bad happens over here with Apple. But I can see Apple at least getting back down here to $100 before I really start wanting to buy. But again, looking at these weekly charts, we don't know how long this recession is going to last or how bad it is. We're not even close to a death cross right here. Back in 2008, we only had a death cross on the 20. You see how fast that drop happened? Over here during the dot-com bubble, look at how that death cross occurred. It was just a couple weeks of just huge drops as far as Apple's concerned. Go over here to Microsoft, again, 2008, really, really bad move. Dot-com bubble, really, really bad move over here. But at this point, we're just getting closer and closer to these death crosses. This, like, if we're going off of the death crosses here for the majority of these plays, it would seem that we're really going to have some more negative moves probably towards quarter 2, quarter 3, and that's where all hell's going to break loose, where we start to find some really bad lows. But we have to have the economic data to keep pushing us down to those levels, as need be. Like Facebook has had a really good rally so far. Nvidia, a very great rally so far. AMD, a decent rally so far. What else are we looking at? Intel, more sideways as always, right? But you're starting to see some weakness here. Like Intel's about to actually make new lows, break the October lows. Who would have thought that? Bank of America is still doing okay because it's a high interest environment. Let's see here that we're looking at. LHX going down to below the October lows a while ago. Philip Morris, and this is tobacco. This thing usually goes sideways though, but you're seeing some weakness here. Yeah, we're probably going to come back down, but it'll be a buying opportunity. That's all I think about it is. It's just one gigantic buying opportunity, and I'm happy to take advantage of it. Technicals like patterns, since these indicators are showing the same. Well, for patterns, normally, you just download a page or some type of picture or something, and you would just be able to see all the patterns like this, and you could try to draw them up against any indicator that you're looking for, any chart that you're looking at. If you guys are using some of the indicators I talk about, I have a link down below if you want to get Lux Algo, but Lux Algo basically will have indicators for you. So maybe if I do this, let's go down, and probably I should make this larger for you guys very fast. Large. And then let's add on the patterns. So it'll put on a pattern right here. I don't really necessarily use this tool, but it says it detected a pattern in The ascending broadening wedge is a bearish reversal pattern anticipating a downside breakout. And I'm pretty sure it's just talking about this breakdown right here. Probably looking at this level, yeah. Do I use it? Not really. But you could always do that if you wanted to. On the 4-hour chart, it would show you right here, right? It's a descending broadening wedge is a bullish reversal pattern anticipating an upside breakout. We're already breaking down below this, so it's not going to break out anyway. But yeah, I mean, there's systems out there to find them for you. I'm pretty sure if you actually, let me get out of this because I don't like it. Let's make this back over here to normal. I'm sure if you went over here to the indicators, metrics, and strategies and you type in like patterns, there might be something here. All candlestick patterns, ABCD patterns, harmonic patterns, reversal patterns, collection, inverted hammer. These are a lot of candlestick ones. ABCD, zigzag, tweezer, reversal. A lot of these are candlestick patterns. I don't know if you're going to be able to find anything else here. Let's see. Yeah, most just seem to be candlestick patterns. Harmonic patterns can be pretty useful, though. Maybe if you want to use these. I don't know if it'll pop up here. Will it pop up? This looks like period 10, pattern line width. Let's go to 4 or 5 here. Enable ABCD, that's fine. Is it going to show any patterns, though? Oh, here it is. Okay. You guys may be able to use these a little bit more. I don't, but you guys can. Honestly, Roshane, I would say that the easiest way I could tell you to make money right now while I'm building out my course is, like, the Lux algo is pretty good. Like, it just told you to sell right here on the 4-hour chart or short. The short's working out pretty well so far. It told you to buy right here, pretty good buying opportunity. It told you to buy right here, and it ended up working out okay, but I would say this one was just right? It told you to short right here, and look at that, it went down pretty well. It told you to sell right here, that one didn't work out too well. Let's go over here. Told you to buy right over here. It also told you to buy again right there. That was a really good move. You know, told you to sell right here. This was a pretty good move as far as the selling. This buy one right here didn't work out too well. So it's not 100%, but it works like 80, 90% of the time, which is pretty darn good if you have a stop loss mentality where you guys don't like lose more than you should. Where you guys, you know, can respect your own, you know, you guys can respect your own, you guys can manage your portfolio properly. Excuse me. Geez, I'm stuttering a little bit today. Looks like a head and shoulders trying to form on the daily Bitcoin. Yeah. It was kind of weird because we talked about this like last week as we were first kind of popping up here. But I thought we might be able to get a little bit higher to make this head because at this point, this is like the ugliest head and shoulders thing we're ever looking at, right? Look at how weird that shoulder looks. We may have another one popping up. Maybe again, if we bounce off of here on this, again, this support level. But, hold on. Yeah. I got some type of seed in my mouth from Chinese food. When we broke down last time when we had a large head and shoulders off of Bitcoin, we broke down off of this trend line and not necessarily the trend line from the horizontal line that would come up like this. We didn't really break down below this one. We broke down below this one here. So I'm wondering if we're going to have something similar show up where if we do somehow find a way to break down below this $22,000 level, or who knows what it'll be at the time, we may be in for a pretty nasty move all the way back down here to maybe around that $19,000, $19,500 level. Remember, if we zoom out, remember this head and shoulders from like years ago now? Shoulder, head, and shoulder. But what did we break down from, you know? Right? Started the breakdown here, came back up a little bit, but then we really just started taking back down. Was not a pretty sight. It's not like we found... Oh, no, I'm talking about this. I was talking about this. Ugh. There we go. Yeah, that was the breakdown right there. Sorry about that. It's been a while since we've actually had to talk about some of these older times of the glory days of Bitcoin. Clean breakdown, decided to come back down even more. You know, it's been a hot minute since we've had to do that, honestly. We haven't had many head and shoulders here. It almost seemed like at one point we might have been trying to make an inverse head and shoulders over here over the last few days, but that was on a different time frame chart. At this point, Bitcoin's closed down below the 20-day moving average, and now it looks like we want to come down even more, possibly back down here to around the 22,000s range as we've been talking about. So open up the code. There we go. All right. Not too much. But okay, everybody, I'm going to end the stream here now. It's been a fun time chatting with you guys tonight. I'm going to go live tomorrow for a while, and while I go live, we're going to be testing out the day trading tools here, primarily the 15-minute chart. So basically what's going to be going on is I'll have this chart open, and we'll be talking and kind of just having some fun. And then while we have the 15-minute chart on, we'll be just waiting to see if we have any buy or sell signals while we're talking. And then I'll make sure to actually enter that into some type of table that I have built out on Google Sheets or something like that. And that way you guys can see it, and you guys can see how profitable or how non-profitable the indicator was during our trading day yesterday, okay? And we'll probably do like $100 trades at 5x leverage tomorrow with the paper trading model based in TradingView. And that way we can have some fun and just see how this would work out if we find one, we open a position here, and then we kind of see where it goes from then on out, okay? But okay, buddy, have a